You feel it, don't you? That tightness in your chest when you place a trade. The silent fear that whispers, "What if I lose it all this time?" Listen closely, because I speak to you from the shadows of every ruined trading account, including my own. I am Jesse Livermore, and I have watched more traders destroy themselves with one fatal mistake than any market crash, any bad strategy, or any losing streak could ever cause. They risk too much, not because they're brave, but because they're greedy, desperate, or delusional. Here's the truth you don't want to hear. And if it hurts, it's because it's true. You don't blow up your account because of the market. You blow it up because you cannot control the size of your bets. And if you continue the way you are trading right now, the market won't need to beat you. You'll destroy yourself long before it gets the chance. Before we go further, answer this honestly in the comments. If you dared to be honest with yourself, have you ever increased your position size right after a win, believing you were on fire? I know your answer, because I once thought the same way, and the market punished me for it, brutally. I paid my tuition in millions lost, not once, but multiple times. The market is merciless to those who refuse to learn. You believe your strategy needs improvement. You think your entries and exits need refinement, but you are wrong. Your real enemy is your capital behavior, because the market doesn't need to defeat a trader who doesn't protect their capital. All it needs to do is wait. And trust me, it will wait. It will lure you in with a streak of wins. It will inflate your ego. It will make you careless, and right when your position is the largest it has ever been, that is when it strikes. That is the capital trap. And 95% of traders fall into it, smiling, confident, certain they are invincible, until their account is gone. In this journey, I will drag you through the darkness most traders refuse to face. I will show you the psychological trap that silently destroys your capital, your discipline, and eventually, your identity as a trader. If you continue watching, you won't enjoy what you hear, but you will walk away changed. Because before you can become a master of the market, you must first escape the trap that has buried thousands of traders, including me. And the truth only gets darker from here. Now that you've stepped into this shadow, there is no turning back. You want to grow your account fast, faster than your patience allows. That is the paradox that destroys you. Every trader begins with the same dream. If I could just double my money quickly, then I'll start being disciplined. But here is the truth you refuse to admit. You want the rewards of a seasoned trader, with the behavior of a gambler. And this is the first internal war that every trader faces. You know you should protect your capital, yet you crave rapid gains. You know position sizing should stay controlled, yet you chase the high of going big. Your mind tells you, just this once. I have a good feeling about this trade. But I've heard those words echo through 1,000 brokerage offices, right before accounts turn to dust. You see, there is a twisted logic inside traders, a voice that lies to you with a smile. If I risk small, I'll never get rich. If I risk big, I'll get there faster. The lie is seductive. It feels logical. It feels efficient. But this is how the trap begins. Let me confront you with a truth that may break your ego. You don't increase your size because your setup is stronger. You increase it because your self-control is weaker. And if that stings, good. It should. Because pain sharpens awareness. And awareness is the first step out of the trap. Now reflect and answer, publicly or silently. Do you trade to win, or do you trade to feel like a winner? There is a difference. One leads to mastery, the other leads to ruin. Most traders don't actually want consistent profitability. They want excitement, validation, and identity. They want to feel like a successful trader before they become one. That is why they break their own rules. That is why they scale size at the worst possible moments. That is why the market takes back everything it once gave them. Here is the paradox carved on the tombstones of failed traders. You must trade small long enough to deserve to trade big. But your ego refuses to wait. You want to skip the apprenticeship and jump straight to mastery, without paying the price. But the market always collects its fee, one way or another. If you don't pay through discipline, you will pay through devastation. This internal conflict between impatience and survival is where traders lose their future before they even begin. But now, we descend deeper. Because knowing the conflict is not enough. Next, I will reveal the psychological trap. The self-destructive pattern inside you that quietly pushes you toward catastrophic position sizing, even when you know better. And it is far darker than you think. There is a moment in every trader's journey when logic dies, and impulse takes the wheel. A moment when you know the right action, yet still choose the wrong one. Why? Because you are not trading the market. You are trading your emotional wounds. Let me expose the silent trap you keep falling into. The loop that destroys 95% of traders long before a margin call ever arrives. It begins with a small win. Harmless, encouraging. A taste of victory that feels like destiny whispering, "You're built for this." That one win doesn't just grow your balance, it inflates your self-image. And that is where the poison enters. From that moment on, you are no longer trading opportunity. You are trading to protect a new identity. I'm good at this. The next trade, you increase size. Not because the setup is better, but because you want to feel better. Then it happens. A loss. Not large, not tragic, but emotionally unacceptable. Because it threatens your identity. Now fear enters. Not fear of losing money, but fear of losing the version of yourself you just fell in love with. This is the invisible trap. You begin trading to protect your ego, not your capital. So you double down. You revenge trade. You try to earn back respect from the market that never cared. You don't see it, but at this stage you are no longer trading price action. You are trading pain relief. Your position size keeps growing, not to win, but to erase emotional discomfort faster. And that is how a rational human becomes a self-destructive trader. If this feels uncomfortably familiar, good. Because I promised you confrontation, not comfort. Here is the harsh truth you must swallow. Your worst losses didn't come from bad market conditions. They came from trying to heal an emotion using a trade. Read that again. This trap has 3 stages. Ego inflation. I'm becoming a real trader. 2. Ego threat. I must prove I'm right. Capital execution. All in or nothing, I need this win. Very few escape once step 3 begins. Most accounts die right there, buried under the weight of just one more trade. Let me ask you, and answer honestly in the comments, have you ever increased size only because you wanted to win back what you lost? If the answer is yes, then you've already met the trap that swallows 95% of traders. But do not look away, because the next section is where the ghost of Jesse Livermore himself sits at your table and tells you what he learned after losing more than most traders will ever see. What would Livermore say about this psychological ruin? How did he identify this trap over a century ago? You're about to find out. Sit down. Because now, you'll hear the truth from the man who lived it, died by it, and still whispers through the trading floors of history. Jesse Livermore didn't just warn traders about risk. He bled from it. He watched fortunes rise like kingdoms and collapse in silence overnight. Not because of strategy, not because of lack of intelligence, but because of the same ego-driven capital trap you are dancing with right now. Livermore would look you dead in the eyes and say, a trader's biggest enemy is not the market. It is his own desire to be right. Understand this. Livermore built and lost entire empires, not due to poor market reading, but because when he abandoned position discipline, the market punished him without mercy. He knew something timeless. Big losses don't start big. They start small, but with size that had no right to be there. Livermore believed every position should earn the right to grow. Not because you feel confident, but because the market proves you were right. He had a rule that modern traders ignore and pay for with their souls. Never increase your position unless you are already showing a profit. Why? Because if you size up before the market validates your idea, you're not increasing a winning position. You're funding a fantasy. That is how traders drown in their own enthusiasm. Livermore viewed capital as a soldier on a battlefield. Every soldier sent into a losing war is a soldier that will never come home. So he deployed them slowly, strategically, and with proof. He made it clear. Your business as a trader is to protect your capital. Profits are a reward for discipline. If this hurts to hear, it's because it's true. You want excitement more than longevity. You want the feeling of progress more than the practice of patience. Livermore would tell you the same thing he told himself after millions evaporated. The market will always offer another opportunity. Your capital won't, if you waste it. Do you understand the level of humility required to say that after being one of the greatest traders alive? He knew this trap well, because he fell into it multiple times, even after mastering the game. But here is the difference between Livermore and the 95% who vanish. He studied his collapses with the same obsession as his victories. He didn't blame the market. He blamed the man in the mirror. And that is the part most traders can't handle. The ghost of Livermore would warn you right now. You are one reckless position away from starting the same downward spiral that erased my fortune. Don't let your story repeat mine. Now that you've seen the principle through his eyes, in the next section I will take you into a real scene. A moment where Livermore made the decision that changed everything. Decision that separates survival from self-destruction. Prepare yourself. Picture this New York Wall Street. The air smells of fear and ambition. Two scents that always travel together. Livermore sits alone, in his private office, late evening. The city lights flickering through the windows like warning signals from fate itself. The market had been roaring upward for weeks. Every newspaper headline screamed, "New era of prosperity." Traders were drunk on confidence. Greed was the language of the day, and Jesse was winning. Not just winning, dominating. His positions were green. His analysis was precise. His name echoed across trading rooms like a legend carved into the marble of Wall Street itself. And that was the danger, because success is the most seductive drug a trader will ever taste. It whispers, "You're smarter than the market. You can size bigger. You can't lose now." That night, Livermore felt the same itch you felt after a few winning trades, the urge to go bigger, not to trade better, but to feel invincible. He broke his own rule. He pyramided fast, too fast. Not with confirmation, but with emotion. He added size because he wanted more, not because the market proved he deserved more. It was the most expensive decision a trader can make. He increased size while still unproven. The next morning, the market didn't open strong. It opened with a tremor, a tiny drop, nothing dramatic, nothing alarming to the average eye. But to a trader holding oversized positions, a small tremor feels like an earthquake. By midday, the selling intensified. He watched his profits shrink, then vanish, then turn red. Faster than he believed possible. He sat still, not breathing. A silence so heavy it could crush bone. He realized in that moment, he didn't lose money because he was wrong about direction. He lost because his position size was too large to survive being early. That day, Livermore didn't just lose capital. He lost clarity. Oversizing clouds judgment faster than alcohol poisons blood. He liquidated, took the hit. A painful, humiliating hit. the kind that brands itself into the soul. But here's the part most traders never hear. That loss became the birth of one of his most powerful rules. The rule that later built his greatest fortune. Add to a position only when it is proving you right. Never when you hope it will. He vowed never again to average into weakness or scale because of ego. Positions had to earn growth. A trade must show strength before he upgraded its importance. This single discipline later allowed him to build colossal positions without collapsing. Scale with confidence, not delusion. Turn early accuracy into massive victories without unnecessary exposure. And you, listening right now, must ask yourself, would you have survived that night? Would you have cut size? Or would pride have buried you? Because this isn't history. It's a mirror. And tomorrow, you may sit in that same metaphorical room, staring at the screen as your oversized position bleeds through your confidence. The question is, will you repeat his early mistake, or will you adopt the rule he carved in blood? In the next section, we go darker, into the emotional crash, the aftermath, and the silent consequences traders never speak of. Brace yourself. Losses don't destroy traders. Shame does. When the dust settled after that oversized disaster, Livermore didn't stare at the charts. He stared at himself. And that's the part most trading gurus never talk about. The invisible aftermath that begins after the loss is booked. It starts with a whisper in your mind. How could you be so stupid? Then another. Maybe you're not as talented as you thought. And then the most dangerous thought of all. I need to make it back. Fast. This is the emotional spiral that kills more traders than any market crash. Because after a large loss caused by oversized risk, you don't return to the next trade neutral, you return wounded, and a wounded trader doesn't trade to win. He trades to heal his ego. Livermore felt that darkness. He felt the sting of humiliation. He had been the golden boy of Wall Street, and in one reckless night, he cracked the illusion of invincibility. He didn't fear the loss of money. He feared the loss of identity. Here is the confrontational truth you need to face right now. Your worst trades aren't caused by lack of skill. They're caused by the person you become after a loss. If that punches you in the chest, that means it's true, because after a heavy loss, you turn into one of three traders. The revenge trader, desperate, emotional. He increases size to get even and blows up faster. The hesitant survivor, traumatized, timid. He enters late, exits early, never trusts his edge again. He doesn't blow up. He just withers away. Or 3. The reborn trader. The rare one. The one who pauses, analyzes the wound, and rebuilds with rules carved from pain. Livermore became the third, but not instantly. He went through the same internal war you go through. The whispers, the self-doubt, the urges to fix it quickly. He endured nights staring at ceiling shadows, calculating every mistake as if replaying a crime scene. He realized something crucial, and if you absorb it, you may save years of suffering. The market punishes ego first, money second. The emotional crash after a large loss isn't a sign of weakness. It's the universe warning you. You broke a rule. Correct it now, or next time, the market won't just bruise you. It will bury you. You must ask yourself right now, and answer honestly in the comments. After your biggest loss, who do you become? The revenger? The survivor? Or the reborn? Because until you confront that truth, no strategy, no indicator, no Livermore rule will save you. This story doesn't end with collapse. It is about rebirth. But the rebirth only comes after the trader faces the part of himself he tries to hide. And that is where we go next. In the next section, I will show you how Livermore rebuilt, the mental reset, the system reset, and the rule-based comeback that transformed pain into precision. Are you ready to learn how to rise after the fall? Every trader falls, but there is a difference. between a collapse and a reset. Most traders don't recover from a major loss because they try to resume trading. Livermore did the opposite. He restarted himself. When he blew up, he didn't search for a new strategy, new confirmation signal, or a lucky streak. He rebuilt his internal architecture. Because here is the truth: you cannot return to the market as the same person who lost. That version of you is already dead. To rise, a new version must replace him. So Livermore created what I call his reset ritual, a cleansing process designed to eliminate emotional residue and return with clarity, neutrality, and discipline. I am going to break it down for you. Not theory, a step-by-step method any trader can implement. Before we begin, tell me this in the comments. What do you do after a painful loss? Stop, continue, or chase? Now, listen closely, because if you integrate these steps, you will trade in a way 95% never will. The Reset Ritual. Livermore's Comeback Method Step 1. Zero trading. When Livermore took a heavy hit, he stopped trading instantly. No one more trade. No, just to get a bit back. He forced a cooling period, because decisions made in heat are decisions made in ruin. Modern traders fear stopping, afraid the market will run without them. That fear is the first infection. A wounded mind should never touch a live market. Step 2. Post-mortem. Autopsy. Livermore reviewed not the trade, but himself. He didn't ask, "Why did the stock move against me?" He asked, "Why did I ignore my rule? What belief made me size too large?" He wrote it down, like a surgeon analyzing cause of death. Because if you don't diagnose the root, you will repeat the symptom. Step 3. Rule rewrite. If a loss exposed a weakness, he didn't switch strategies. He reinforced the rule that was violated. For example, if oversized risk caused the loss, he reduced his max size rule. If emotion hijacked him, he added a forced pause condition. This is the opposite of amateurs who throw their system away after a loss. Pros don't replace the engine, they tighten the bolts. Step 4. Small sizing reboot. When Livermore returned, he sized small, intentionally, even with a winning edge. Not to make money, to regain rhythm, to rebuild execution confidence. Modern traders mock small size. But hear me, if your pride is too big for small size, you are not ready for large profits. Step 5. Emotional detachment. Test. Livermore conditioned himself to feel nothing. If he won small, no excitement. If he lost small, no sting. Only when his heart rate and ego stayed calm did he allow size to increase. This ritual wasn't about strategy. It was about rebirth, because a trader who hasn't emotionally reset is like a soldier returning to battle with a shaking hand. The weapon is useless if the mind is unstable. The amateurs think comebacks are fueled by motivation. Livermore knew comebacks are fueled by purification. And once he returned, he never returned as the same man who left. In the next section, we will tighten the screws further. I will show you how today's trader, in this fast, manipulative, algorithm-driven market, can apply these rules with precision, without excuses. The markets have changed, but traders haven't. Back in my era, the tape whispered. Today it screams, with alerts, Discord calls, Twitter signals, AI gurus, and charts blinding with indicators. But beneath all the noise, the human flaw remains identical. Fear, greed, revenge, hope. Same demons, different wallpaper. So let me show you how to apply my principles, precisely, in this modern battlefield. Not in theory, in execution. Before we begin, answer this in the comments. Do you currently have a written trading process, or do you trade by impulse? If that question stings, it's because you already know the truth. Let's build your modern framework. Step by step, the way a professional would. Step 1. Set a maximum daily damage limit. If you lose this amount, you must stop trading for the day. No exceptions. Formula: daily stop. 1% of total capital or one winning trade's profit, whichever is smaller. This prevents spiral losses. The fastest path to ruin. If this feels too small, good. It means your ego needed the slap. Step 2. Hard cap your position. Size before the trade exists. Retail traders size during the trade. Professional size before. Rule: 1-3% of capital per position while building a sequence. Never 100% at once. If you cannot pre-commit the size in writing, you are gambling, not trading. Step 3. Mechanical stop placement. Stop losses must be based on structure, not fear. Pick one model and stick to it for all trades. Swing trading. Below structural low or above structural high breakouts. Beneath breakout line retest level trend. Following, exit on break of trend line or trailing stop if you change stop logic mid-trade. Understand this: you didn't adjust strategy, you surrendered discipline. Step 4. Emotional pause rule. If you hit 3 consecutive losing trades, trading stops. Not because of money, because of mind contamination. Losses change your perception, distort risk tolerance, and corrupt logic. Take 24 hours off, reset, return neutral. If you resist this rule, that resistance is your addiction speaking. Step 5. Pyramid only when market proves you right. Do not increase size because you believe the trade will work. You pyramid only when the market pays. You rule. Add size only when the position is profitable and trend confirms continuation. Not before. Never. After a pullback to average down. Averaging down is hope. Pyramiding up is proof. Step 6. Trade fewer. Hold longer. Modern traders overtrade because screens refresh every second. Turn off live PL display. Check charts at predefined intervals only. Wealth doesn't come from more trades. It comes from fewer, better trades held longer. Step 7. Protect the emotional. Self-treat your psychology like capital, because it is. This means no trading when tired. No trading after emotional events. No trading without clarity. Avoid social media. During open trades, your environment determines your execution. A chaotic mind cannot produce consistent results. Listen carefully. Applying rules is not about strength. It's about surrender. Surrendering to a system greater than your impulses. Surrendering your ego at the door of the market. Surrendering the need to control what cannot be controlled. If you adopt these steps with seriousness, not inspiration, not motivation, but discipline, you will operate in the top 5% of traders. Not because your strategy is superior, but because your self-management is. And now, we enter the final chapter, the one most traders avoid. Integration, identity, transformation. There comes a moment in every trader's life where the chart goes silent, where the noise of indicators, strategies, and signals fades, and only one question remains. Am I the kind of person who can handle money? Or will money handle me? This is that moment for you. Because everything you've heard in this video, every rule, every principle, every scar carved into the market over a century, means nothing if you continue trading with the same identity you walked in with. Let this land. Your results will never rise above your self-discipline, not your strategy, not your broker, not your account size, just you. And if that truth hurts, it's because it's real. Most traders would rather lose money than lose their ego. But hear me, one final time. Capital doesn't disappear because the market is cruel. It disappears because you allowed your weakest self to sit at the keyboard. The undisciplined version of you, the impatient version, the greedy, version. That version must die. If the trader is to live. Dark? Yes, uncomfortable? It should be. Transformation never feels pleasant when it begins. Because the market doesn't just test your skills, it tests your character. You now stand at a door most traders never open. On one side, the 95%. Overtrading, oversizing, blowing accounts, blaming the market, endlessly restarting. On the other, the 5%. Methodical, cold-blooded, precise, patient, disciplined, not gifted, forged. This video wasn't created to motivate you. It was created to change you, if you let it. So answer this, publicly, in the comments below. Which version of you will walk into the next trade? The impulsive gambler or the disciplined operator? Say it, declare it, because the market will test your answer. And it tests without mercy. If this message shook something inside you, if you felt even a moment of discomfort, if a part of you whispered, "This is exactly what I needed to hear," then don't keep this knowledge to yourself. There is another trader out there, right now, on the edge of the same cliff you once stood on. Share this video with them. Pull them back, and remember, the market does not reward the fearless. It rewards the prepared. Until the next lesson, guard your capital more fiercely than your opinions, more fiercely than your hopes, more fiercely than your pride. Because once it's gone, the market will not give it back.